Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Wednesday, March the 13th, 2024. And again, wild and crazy day. Every time I think I've got it down, what the market's trying to tell me, where it wants to go, you come in the next day and it goes, no, not going to go there, not going to do that. And it basically revolves around the NASDAQ. We saw the Russell today really put in a pretty strong day and a pretty strong close, but that first hour was like, wow, just pouring into mid cap, small cap, and exiting a lot of other stocks that happen to be part of the NASDAQ and also part of the S&P. Now, the NASDAQ took the brunt of the hits, I will say there, in terms of, the market, the NASDAQ moving lower. The S&P, of course, did move lower, but regained its footing by the end of the day. Now, what, in essence, are these markets attempting to do? And if we're looking at it on an Elliott wave basis, what is the Elliott trying to tell us that the market is attempting to do? So I've kind of stripped all of the internal, which is good to know, but at this stage, I need to see a clearer path without all of the internal counts. So I took it all down and I'm trying to think, okay, what is the market telling me? Because we now, as I've got it set it up, we have the ABC up. Here is minute wave 4. That low was on the 29th or 28th, 29th of February. So basically, so far in the month of March, and now we're on the March the 13th, the market continues to play higher or to track higher in an effort to complete and put in a minute fifth wave. Now, because of the three-wave nature of this thing, and the fact that we've got, even if it wasn't, then I had to say that this is 1 and this is 2 and this is 3 and this is 4, can't, because look at the overlap is just dynamically incorrect. But if it is a 1 and we're forming a diagonal triangle for wave 5, it's going to start to be put a little bit of a tone of like, okay, these things should be expected. The deep declines, the deep pullbacks, the sudden flips and turns that a market will do. That tells me that we remain in a topping process. And again, today really was wrapped around Nvidia, which at one point today was down 31 or 32 points, rallied all the way back, dropped back down, rallied back, dropped down. So, and the thing is that it's not that I think Nvidia was thin, but they were coming in and moving large amounts of stock today, both sides, whatever was going on. And that tends to now go back and tell me that what it truly is trading here are the options. It's kind of how the options are taking over what truly is happening. And there was some good stuff written about it in terms of volatility. And the volatility is really being created in and around Nvidia. But how the movement in Nvidia shoves the volatility all over the board, which then within the indexes shoves these prices up and down and all around as that volatility triggers other trades within the options in the ES, in the SPX, in the spiders, in the Qs, in the SQs, and the TQs. And so suddenly the underlying called Nvidia is really dictating what's going to happen in the S&P and in the NASDAQ. And then subsequent to that, in the spiders and the Qs and the SQs and the TQs. So you start to look at one stock having that much power, and it really was not just that one stock, obviously. We saw Apple start higher and then just smacked and then stay down. AMAT, AMD, because Nvidia is all over the board. Meta down heavy, being back, ended finished down. Microsoft, both sides in play today. Now, what I think we got going on here in the S&P 500, in the futures market, and is that, again, I took it all down, ABC wave 1, minuet wave 1 of minute wave 5, and it's within a developing diagonal triangle. And we are still within wave 2. I had placed wave 2 here, by the way. It's like, no, because this just is not, even counting 1, 2, 1, 2. What is it again? Another 1, 2, too many. Too many. If it turns out that way, then this thing flips and flies and absolutely does not stop tomorrow. And tomorrow morning, before the market opens, we have the PPI. Now, last time we had PPI, they loved it. I think it was right here, or actually right here. Wherever it was, the market loved it. And after the CPI produced a downdraft, the PPI came back and went like, okay, boom. And they took it. And the market then moved higher for the balance of that particular day. Now, could it do it again? Yes. And if it does, what is it then? 1, 2, 1, 2, 1, 2. And it's just going to start going, and the 3, 4, 5, 4, 5, 4, 5 until we get a 3, and we'd be looking at much higher levels. I mean, I'm serious now. If it's going to come down and it's not going to finish any downside and now start moving up, and the PPI, however it comes out, gets the warm hug and embrace of the market, then next week, so a week from today, we have Fed meeting day. Now, there's all that conversation going on around that as well, right? Are they going to cut? Are they going to leave it alone? Are they going to give us hints that a cut's going to come in April, May, or May? Or do we have to wait for June? Or isn't that going to happen? Now, CPI showed that inflation is still extremely stubborn. Inflation is still being felt. And guess what, folks? There are other things that now it's like we look and we go, oh, the gas prices, yes. The prices of new cars, yes. The prices of groceries, of food, yes, that's all in there. But here's something that I don't think many of us are really looking at, and that is the cost of insurance and medical insurance, health insurance, home insurance, automobile insurance, or vehicle insurance has really started to climb. And so when we start to put that all together, we keep hearing it's like, oh, inflation's under control, and we really think that we're going to meet our goal. So saith the chairman of the Fed. I don't know. Maybe, hopefully, okay. But in any case, the market is going to react to the PPI number that comes out tomorrow. Also, because it's Thursday, it must be initial jobless claims day. Is that going to put a damper on the PPI, the producer price index? Or is that going to give it an additional boost because the economy is so robust, which in and of itself, folks, is a little bit inflationary at this stage. But the way I'm leaving this is that we're likely going to get a swing lower. Now, whether that all takes place and happens prior to the PPI number coming out tomorrow, so be it. But I'm looking for and I'm calling this a B, not 1, 2, 1, 2, or 1, 2, but a B. And that suggests that we come down in a C wave. Now, first line of defense is that wave C would equal wave A at 51.59. And that's got to do better because we need to get this, the C wave should come down and get below 51.57. So we also have underneath that 1.618 at 51.06. So, we're up sitting very comfortably above 5,200. And I think we need to kind of do a really quick slam dunk. And that would then put in a C wave, which should be fast, should be 5 waves, should be done quick. Get it over with, get back on to business. And that's, I think, what can happen. And it might just happen as quickly as we saw all this noise from the CPI. Remember, that was just the other day, right? Where we had this noise. Oops, that's not going to work. Let me try it this way. We had this. The number. Oh, I hate it. Oh, we love it. Oh, we hate it. We just love it. So what's going to happen tomorrow is truly anybody's game. But let's just take a peek. That I believe that we should come down now. I know I've been talking upside. I think it's still coming, but we're going to have to finish this wave 2. This just gets too sloppy. It gets 1, 2, 1, 2, 1, 2, 1, 2. It's like, no. And then we get a big drop down and it doesn't fit anymore. But if it should just go like, okay, so much for whatever that was, here we go. And they take it. So again, can't speak for Globex, can't speak for when Asian markets open, when European markets open. And if we do come down and finish this, and then maybe do a little deep dive off of that data and then run it. So finish up a wave 2, start a wave 3, make it a cleaner, not the noise that we've been getting, but that is also typical of a market that is attempting to put in a high, put in a top. And it's getting the push-pull, and it's crazy. I mean, it's fine for trading. Don't get me wrong. If you're a day trader, it's there's been plenty to do. It's been great. Even if you're swing trading in options, even if you're day trading in options, it's been great. It's not been a bad story. Okay, so here's support. First of all, you'll see how some of it lines up right with the moving averages, like 51.92. First up, that's 0.618. I would look for it to come, look for it to come down deeper than 51.92. We have 51.59. That's where C would equal A. And if it came here and stopped and ran, I would accept it as the C wave, put a 2 there, and start running with it. I'll let you know. But further down, we have 51.23. I don't necessarily want to see it down here. It breaks all the trend lines, and it's just really not a good story. So again, if we start to break down below 51.23, it's going to, again, really put the pressure on that this is all done. And I'm going to have to sit here and go like, okay, really, what was all of this? Was this 1, 2, 3, 4, and 5, and it failed? Just saying. So we have that. Now, yesterday's moving averages remain in decent shape. They're not flipping over each other. We got the 20 kind of going sideways right now, and we got the 4 and the 8 just kind of bebopping around, like weaving in between. The 50 still in a little bit of an upward trajectory, but kind of wanting to go sideways because the market's not pushing as hard. That can change. That can change. Go over and take a look at the NASDAQ. In the NASDAQ, I did the same thing. I went and I just really stripped it all out. And I moved the 1 up to here. And So this turns into ABC, A, B, 1, 2, 3, 4, 5, C, wave 1. Otherwise I got to do ABC 1, ABC 2, ABC 3, and wave 4 is getting ready to knock out the low of wave 2. It just stops making sense. But there's a couple of ways to look at the NASDAQ. The NASDAQ can be all done. I can do it here if I had to. Can be all done. And what we're doing now is 1, 2, and off the charts we go. I'm giving this a big benefit of the doubt that it's going to hang out inside of the trend lines for the diagonal. And again, A, B, not 1, 2, 1, 2. It failed big time. In fact, it failed and put 5 down in. All right. 1, 2, 3, 4, 5. I was on my hourly. I was like, oh, brother, here we go. Now, again, I'm giving the benefit of the doubt to that the intent here is for the market to continue to go up. Let me just straighten that out a little bit, get it back up into shape. Come back down there. So wave 1 coming in, now we got a 2. And here we have 100% at 17,962.75. Don't want it to really mess it up. But we need to come down to maybe at least, I think we can break and between these, and I could probably fill in some of the blanks, but get close to here, get close to that, come down and touch that trend line, which is still just above 18,000. If it dips below and dips and runs back above, fine. It'll still work. And I can put a 2 there. Now, here's the same deal. Wave 2 should yield to wave 3, and wave 3 should be dynamic. And in this case, it's to the upside. So now we've had a couple of days where, again, they're nailing, or actually just really today, they're nailing Nvidia and then buying it back. Are they going to come in tomorrow and just go, we're taking it, we're taking it, we're taking it, we're taking it, we're taking it? It's going to end up at 990? It's going to end up to 1,000. I mean, B of A came out, they gave their new price target to it. So we start getting those. And it does, you can do fibs in Nvidia that'll show you 1,100 in the stock. Doesn't mean that that's where the stock's going to go, but hey, these guys got to come up with something. So cycle-wise in Nvidia, we've got a minor and a major cycle all kind of topping out, putting downside pressure on the stock, not necessarily going to make a gigantic drop, but from 974, which is the current high, a drop back below 800 is not necessarily out of the picture as these cycles come into bottom in, I think, mid to end of April into the beginning of May. Now, how's that going to go with the NASDAQ? The NASDAQ cycle is a little bit different. So I'm keep trying to tell you, it's getting really strange because suddenly the individual components, which are in control of the NASDAQ, right, are having a much larger say. I'm going to leave that as is. Nvidia will do what Nvidia's got to do. And I'm going to look for a completion of a small or of minuet wave 2. And that's minuet wave 2 of minute wave 5. And then we get a third wave. And again, that third wave, if you come down here, I'm really just looking for the third wave to go up and poke its nose above this, but come back down for a 4. And then wave 5 can slice up through it. right? Now let me go back out to the 4-hour. I can go like this to see. Now we have it coming all the way up, but it's got to follow it up. Can't not necessarily do it from here. Comes down, touches here. I've got the 4-hour 200 beautifully to give support at 68. We have the trend line at 64. So it all fits. It comes down, touches both, and then bounces. See, on the 4-hour, it doesn't look so bad. We come down and we get it down here. And 100%, yep, I'll take that. That wave C equals wave A. Boom, done, go. And then we get a third wave. Moving averages here on the 4-hour, flat, declining. After getting it all back in alignment, now it's going to start playing around with itself. Not an easy task at hand, folks, to be counting all of this out. Not an easy task. This and this and this. And then all of this just killing themselves. 1, 2, 1, 2, 3, 4, 5. So that's an ABC down on by itself right to there. So 1, 2, 1, 2, 3, 4, 5. A, B, C. 1, 2, 3, 4. One bigger 5 and finish. Possible. An extended 5 gets this wave 2, puts in that C wave, and then we go. So that's the story from me for today. This has not been easy. I know a lot of you are agreeing with me, and I appreciate the comment, because I tell you, I sit and I stare and I move it around and I look at it and I go like, wow. And again, folks, I have been doing Elliott and presenting it on institutional, and also just presenting it since 1989. And when I lived in Europe, and when I was there, I was presenting it on the European markets, and again for traders. So, and I thought I had difficult times then, but no, this one takes the cake. And yes, these are new all-time highs across the board in our indexes, but boy, it's just the whole process that it's going through right now. It is truly a battle out there about, I'm going to buy it and you're going to sell it, and they're moving it in speed. All right, I'm going to leave it at there. Now tomorrow, again, let's just go over real quick what we got coming out. We have at 8:30 a.m. Eastern. First off, U.S. retail sales. Then we have the producer price index, and we also have initial jobless claims, all coming out at 8:30 a.m. Eastern. Initially, producer price index is supposed to come out unchanged. Core is supposed to show a decrease. And the other two are not really coming in with any estimates. And we have initial jobless claims. 10 a.m. Eastern, we have business inventories. So let's see what happens. Have a great trading day tomorrow. The next update will be on Thursday, March the 14th.